Hello traders, Rich here and welcome to a new video. Today we are going to learn how to analyze any chart from scratch. So as you can see, we don't have anything on the chart, but by the way, let me delete RichTL and RichTL as we're not going to use it. So we'll learn how to analyze any chart from scratch, whether it's a stock, commodity, crypto, index, or forex. But we will take an example on CAD-JPY as you can see. So let's get started. Here we have CAD-JPY, and as we all know, we always start from the weekly time frame, right? We start from the weekly and daily to take to know where we stand in the market and to know what to look for. Are we overall bullish? Are we overall bearish? Is the market stuck inside a range? To get a feeling of what to look for and when to look for buy or when to look for sell setups, right? Then we will zoom in to lower time frames to H4, H1, or even M30 time frame to look for what we call triggers. So as you can see, first of all, we start with the weekly time frame. We can start from a zoomed out chart, and then of course we'll zoom in to monitor the latest price action to know where whether the bulls or the bears are currently in control. So from the zoomed out chart, you can draw your levels to know where we stand in the market, to know where are our high probability resistance and support. So as you can see, we do have many rejections from this area around here and here as well. And we also have this very strong support around 74, 75. And we always optimize our levels to become round numbers as traders tend to place their stop loss, take profit, buy limit, sell limits around these round numbers. For example, if a trader wants to put a buy limit, he won't put it around 74.691, right? He'll put around 75, and he'll put his stop loss around 70, for example, 74, right? So that's why I always optimize it in a way to become round numbers. Anyway, it doesn't really matter as we treat our levels as zones and not laser levels, as I always say. Anyway, we'll take some examples now. Then anyway, we won't need this big view for now. So let's zoom in as we are interested in the latest price action. As we can see, first of all, we get a feeling about the markets. We do a market 101 structure to know where the price is heading. As you can see, this one is overall bearish. From a market structure 101, we know that when the market is bearish, price will be making lower lows and lower highs, and higher highs and higher lows in case of a bullish trend, right? So we know that we are in a bearish trend as price is making lower lows and lower highs. And we try to identify the upper, I call it the outer trend line, the upper and lower bound of the range. In this case, it's a descending range, right? So as you can see, this one is currently trading inside below this trend line, which acts in our case as a non-horizontal resistance, right? So, and as I always try to do, I try to, if you're not familiar with the keyboard, we just click on this one and we press Control and hold. So I hold here and drag and drop it. Okay, so I always try to see if we can make a projection, and as you clearly see here, we have a perfect fit. Here we go, lower low, lower low, lower low. So we can we can connect this trend line by we can draw this trend line by connecting these lows, and we drew this trend line by connecting these highs. So, and as we all know, I don't know if you guys are familiar with my previous material, but we can draw our trend lines from weekly from 2 swings only, right? So starting from here, we can start to look for sell setups and buy setups around our trend lines. This one rejected our trend line the first time, and as always, we look for sell setups. We don't just sell immediately like many traders do, right? So we always wait for extra confirmation. So as you can see, price was going up, and here the structure is broken down. Let me zoom in. Here we go. Just a quick and simple example. Price was making higher highs and higher lows. We can see them clearer on H4 time frame. then the market failed to make a higher high and made almost an equal high. So starting from here, we can know that the bulls are losing momentum and a reversal might happen. Okay, so higher high, highs low, higher low, higher high, higher lows, and the reversal is confirmed after this break. So when price breaks this one, we know that the short-term bullish movement is over and it's time for a trend continuation. Anyway, let's not focus on the previous price action. Let's monitor the current price action. But before we do, we want to know where we stand in the market. And as you can see for now, just from the weekly time frame, we know that this one is currently sitting around the upper trend line. And the reason why I'm doing this with my trend line is because it's not a laser line. It's a zone. Just like horizontal support and resistance, our trend lines are zones on our chart. So please don't just buy if the trend line is broken upward, as it can still reverse and continue down. Okay, so and the same case goes for this one. So it's a zone. You have to treat it as a zone and not laser line. But to make it clearer, let's just draw one line, right? Here we go. So I always like to make it as higher as possible in the case of an upper trend line, and as lower as possible in the case of a trend line, of falling trend line below price. So for now, as we know from the weekly time frame, price is currently sitting around our upper trend line, which is a non-horizontal resistance area, right? So we'll be looking for sell setups around this area, unless, so now we are overall bullish. We were in an impulse phase. So in this case, it's a corrective phase, but it's a very huge. Okay, so here we were in a corrective phase, impulse, corrective, impulse, and also corrective, impulse. The reason why we are calling this one corrective is because it's making a lower high, right? So it's a lower high, and this one is an impulse because it's making a lower low. So whatever the direction is, we call it the impulse, as it is the swing that's pushing price into this direction, which is, in this case, it's a bearish trend. So let's make it short, right? So corrective, impulse, corrective, impulse, corrective, and now we're looking for the impulse phase, but we can't know from where the impulse will start. That's why we have to look for extra confirmation. So many traders would have told you that, yes, it's very simple, look how easy it is. It's very easy to see it when you look back in history, right? But if you were trading live, maybe price were around here and you were looking for this corrective movement. So you had this trend line, for example, and you told me that I'm looking for sell setups. So especially that for those who treat it as a line, if they drew it like this, maybe they would have entered buy already around here when after this candle close, and they wonder why their stop loss is hit. So that's why we always wait for extra confirmation, and we don't treat our trend lines as lines, but they are zones on our charts. So let's continue. And that's why we can't, what I was saying, yes, I was saying that it's very easy to see in history, yes, I could have sold here, I could have sold here and here as well, okay? But in real life, in real time, in the forward testing, it's not as easy as it looks like, right? So many traders will have put their trend line like this, if price were around here, and they were looking for sell, and then they sold around here. We can't know when the impulse will finish until it does. So some traders would call it, you are entering late. Yes, late, better than sorry, right? So I prefer to enter with extra confirmation better than entering with a risky trade. As I always say, we are like snipers who wait patiently for the perfect shot. So for now, we are in a corrective phase. We can't really know if this one would end around here or now it will end and will start reversing. That's why we will zoom into lower time frames and look for potential sell setups. Unless, as I always say, unless price makes it upward aggressively. By aggressively, I mean aggressively in a way that whoever drew this trend line would have been broken for him. So if trader C drew it like this, trader B like this, and trader D like this, everyone has his trend line broken. Then and only then this zone will become support and we'll be looking for buy on C test. But again, let's keep it simple and let's keep it as one trend line only. Here we go. So in this case, if we have a breakout upward, what area or what level, what zone would the price would reject? Here's our first rejection zone if price made it till around here. Why? Because this one is a strong supply area. If you don't know about supply and demand, you can check out on one of my videos on YouTube. You can see I have a full video dedicated for supply and demand. A demand when price makes an explosive movement upward, so many traders would have put their buy limit orders around here because they are in pain that they didn't catch the original movement. So that's why price tends to reverse after reaching this area. And a supply zone is completely the opposite when we have an aggressive movement downwards. We have two types of supply and two types of demands. We have a drop, here we have a base and drop again. So here we have a supply zone as well. Okay, and we have a rally, base in this case, and drop. Okay, so this is for our supply, and for our demand we have a drop, base, and then rally. And for the demand, I can find an example for here, but you know what we mean. We have a rally, base, and then rally again. So in this case, we have a rally, base, and drop. So that's a very, very strong supply. I prefer to make it in, let's say, in blue. Here we go. And here we go. So for now, we'll be looking for sell setups. If price breaks it upward, then we'll be looking for buy around here. And as price approaches our upper supply, as it is the first rejection area that may hold price down, is this supply. So long story short, we'll be looking for sell, then or buy, and then sell from here. So that's what we know from weekly time frame, and it's very, very important. Many traders make this mistake that they start the analysis on M30 and H1 and then zoom out to look for potential zones. We have to do it all the way around. We start with the weekly and daily to know where we send the market, and then we zoom into our time frames to look for buy or sell setups. So for now, we know from weekly time frame that we are looking for sell setups around this area. And if price goes down, what would be our first key rejection support zone in this case, holding price up? We can see it clearly from here. We have a demand zone, right? And we can draw this one in red, for example. Okay, or we have a support also. Okay, and also if you don't know the difference between support and resistance and supply and demand, please check the video. So you have a support as price. We have many failed attempts, just like we did in the zoomed out, if you remember. And we also have a resistance here, if we can see, because also price rejected many times. So, but let's keep it simple for now. Let's keep it for the zoom in view. So long story short, we'll be looking for sell around here and buy around here, of course, and sell again in this case, and sell as mentioned before and buy as mentioned before. So let's keep it this way. And now we'll zoom into our time frames to look for our triggers, right? So first of all, we zoom into H4 time frame, and here we go. Let me see. We can see. Yes, we can see this one, but we can't see our trend lines. So let's make it appear on H4. Here we go. We want to see it on all time frames because it's a very strong key rejection zone. So here we go. So we'll start with the H4 time frame. Now from H4, we know we can zoom out and also we'll zoom in. But let's start with the zoomed out picture. I can see the low. Here we go. So now price is approaching a potential non-horizontal resistance, But from a short-term perspective, we are still in a bullish phase, and you don't want to sell a bullish phase, right? Or what you mean a bullish market. So while waiting for a shift in momentum, we want the sellers to prove to us that they are strong enough to push price lower. For now, we can see that we have a big impulse, more corrective, big impulse, more corrective. In this case, the impulse is moving upwards, so as well in an uptrend. But as we know from here that the buyers aren't strong enough, because as you can see, they will be able to push price higher. However, for now, we know that the swing is not finished yet. But for now, we know that if this one reverses from here, we know that the buyers aren't strong enough to push any higher, because if they were strong like before, they would close around here. The impulse would end around here. But for now, again, we can't really know for now, but we are preparing ourselves of the next possible scenarios. So from this impulse corrective, can we draw any boundaries? Yes, we can. We can draw this one, and we can draw this one, right? Of course, we'll make them in blue for now. Let me see if this one is broken. Yes, this one is broken, so it's not valid. Also, if you guys don't know how to draw valid trend lines, also check one of my videos on YouTube. In this video, I'm trying to put everything together so that you can analyze any chart just using market structure and basic components and tools like trend lines, point resistance, and zones. So let's zoom out again, and here we go. We can draw this one, right? But we can draw it as a parallel trend line. Most importantly, our trend lines shouldn't be broken. So we can draw it like this, but most importantly, it shouldn't have a candle close above it. So we know from a market structure perspective, from H4 time frame, that CAD-JPY is overall bullish, making higher highs and higher lows. But we are looking for sell setups. Let's make this one in blue, as mentioned. Here we go. And here we go. We want to see these trend lines also on lower time frames, as we may zoom in again and look for potential setups. But we don't want to see these trend lines on higher time frames, as we don't need it. Here we go. So for now, CAD-JPY, since we are looking for sell setups, we will be waiting for our triggers. So as per our trading plan, we'll be waiting for a new swing to form around our lower blue trend line. As for now, it's only connecting two swings, 1 and 2, right? So one impulse, and here we go, 2. And yes, these two are considered as one touch only. Also, if you don't know how to draw it correctly, please check the other video. And here we go. So for now, we are waiting for a third swing to form around our lower blue trend line to consider it valid, and then we'll enter sell on break downwards. So here we go. I will draw a path. What we'll be waiting for, here we go. So waiting for this swing to form, then an upward movement. We can't really know from where, but we are waiting for this one, and here we go. So on CAD-JPY, from a medium-term perspective, we are still overall bullish, but since it's sitting around a resistance area, we'll be looking for sell setups. We don't want to see this one except on H4, as it's an idea dedicated to H4 only. So here we go. And here as well, we don't want to see it except on H4 time frame. So that's how we keep our charts clean, so that when we open our charts again, we know exactly what to look for. So you don't have to do your analysis all over again. And of course, I will save my chart so that I don't miss it. Now, let's continue. So for now, we are looking for sell setups, but since price is sitting around here, around the upper around the upper brown resistance, which also, as mentioned, is a zone, we'll be looking for short-term sell setups on N30 to catch this entire corrective movement, as you can see. Also, we could look for sell around here, as it's sitting inside around the resistance area around the brown trend line. So let's delete this one, we don't need it, and here we go. And we can look for sell setups around this area. So we zoom into our time frames again, and here we have our trend line. Let's make this one in red. And again, this one is not valid yet. It's still an idea. Price can still break it without it being valid. In this case, for example, if price breaks it now, we will not sell, and this one should be deleted. Okay, we are only interested in selling this one if price would form a third swing around it and then breaks it downward. That's why you see on my analysis this path. We will be waiting for a third swing to form around it. Here we go. And we will enter sell on its break downward. And of course, when the sell is activated, as usual, our stop loss would be just above, just above the last swing high, and we target a 2-to-1 risk to reward ratio, which would be around our lower blue trend line. And of course, we'll be waiting for this and this big swing to form, and then we'll enter sell on its break downward as a medium or long-term sell setup. But for now, here's what we'll be waiting for on CAD-JPY. We are overall bullish. We are not going to sell now. As mentioned from weekly, we can't know where the impulse will end. We can sell here, but price can still go up to finish the impulse before going down. So always wait for extra confirmation. And as per my trading plan, I wait for trend lines, patterns, and even we have customized strategies using RichTL and RichBomb. But this one is not about RichTL and RichBomb. This one is about how to analyze your charts without any colorful indicators like RSI for overbought, oversold, or like moving averages, just using simple market structure. And trust me, it is all you need. Don't complicate your trading. Don't just add colorful indicators, especially if the indicators are lagging. Always just start big and zoom into lower time frames to look for sell and buy setups. And with this market structure and by entering for other traders who are entering late, for us who are entering with more confirmation, when we do that, we have an edge over the market. That's our first edge. And our second edge is through risk management by targeting double our stop loss. So for example, if we enter 10 trades, we have 5 losses and 5 wins. The 5 losses, we've lost 5%. 5 wins, we won 10% because we are targeting double our stop loss. So we are still in profit. So even with a 50% win rate, you would be profitable using this simple but yet effective trading plan. So that's it for CAD-JPY and for the market structure and how to analyze your charts from scratch. As mentioned, you can hide CAD-JPY and apply it on anything. I always say, just give me any chart without telling me which instrument it is, and I'll still apply the same analysis, whether it's crypto, whether it's Amazon, Apple, Dow Jones. Okay, so you can apply it on anything and everything. You can try it out and feel free to ask me any questions, and I would be it would be my pleasure and honor to support you in your trading journey. Best of luck, and I'll see you on the next one.